weakness in the market really continues, but for what it's worth, we have been fairly flat for the last couple of hours. So we haven't moved much either on the upside or on the downside. Pretty much flat at the moment with that cut of around 150 to 200 points. That's the kind of cut we have been maintaining throughout. What is doing well in the trading session today is Vijaya Diagnostic. That stock is up 8%. Ratnamani Metal is doing quite well. VIP Industries is higher. You also have NLC India, Indiabulls Housing Finance or Sammaan Capital, which is the name that is higher by 5%. On the losing side, Adani group of companies continue to be under pressure. Thermax surprisingly is down 5.5%. And you also have REC, PFC, a lot of public sector banks, the likes of PNB, etc., which are under pressure. Nuresh, if I can come to you on some of the stocks which are under pressure, Thermax, for instance, REC, PFC, for instance, is there a scope of bottom fishing here, or there would be lower levels coming and one should not look at, kind of buying these in a, very quick fashion?
Actually, the other way is around. All these names looks interesting. Thermax, after topping out at 5,700, 4,200 is a very strong support. So that's the price point you want to buy as closer as possible. Stock looks interesting, has gone through a one-year consolidation. Same way, if you look at REC, the stock had been holding on about the 480, 490 mark. Actually, it was a reversal a day back. Today, the stock has taken a hit post the Adani news, but a good recovery from the intraday lows. I would not expect it to break that multiple supports around 430 to 450, which has been the low for the last 1 year. Same way, PFC 400 has been the low for the last 1 year. So expecting this as a good price point to actually accumulate and have some patience, be ready to see the volatility.
Subramaniam joins us. Actually, I'm talking to him after a while. Hello. How are the grandchildren?
It's just turned one.
Time flies. Time flies. I still remember cherishing the sweets which you'd sent. So shall we talk stocks for a change? I mean, you've been helping us a lot with personal finance advice, but today it's all about what is happening in Adani group of companies. Without getting into a specific stock advice, let's understand the impact of the news. If you're a fund manager, how would you analyze this news?
So the first thing I would look at is that this is an allegation, right? You're innocent until proved guilty should be the thing. Markets tend to overreact on such news, right? So that's the first step, is that to realize that the market panics when such news comes. And so at this point, is that panic on today done, or is tomorrow the panic going to continue? That's a decision to make, number one. Number two, if you see, this is related to a specific green energy project. Now the entire Adani pack got affected. So I would still say the core business model, if the cement company, the port company, those kind of things, I don't think the business models have changed because of this. So I would say that where those valuations, right, were a little bit overvalued because the whole market was overvalued, right? To the extent that the correction is coming there, I would say some fund managers would look at buying those not related to the specific case over a period of the next few days, right? Because they are good, solid operating companies, which are just sentimentally getting affected by this particular case, right? The other thing around this is that since this is about the solar and the green, the world's largest green award and all of that, the question around the overall infra on the renewable energy pack, right? Some of the investors would look at it and say, is this going to change things at the ground for the overall renewable energy thing? So there might be some easing of buying on that front. And so there could be good opportunities coming up in those spaces. So overall, I would say that on this particular case, obviously, we cannot comment because there has been an allegation. They have responded denying it. Obviously, the political aspects of it are also playing out very strongly. But not to buy, actually, the companies which are actually affected by it, I would say you stay away because we still don't know what the ultimate answer is.
It's looking, Sunil, irrespective of today's news development.
No, irrespective of today's development, I would say that the market, I would say, is in for a continued period of volatility for at least another month. I see this based on three things. One is the Trump effect, which is still playing out in terms of a stronger corporate America and hence a tendency to invest back in America away from emerging markets. That's number one. Second is the US inflation numbers plus the economic growth numbers have suddenly thrown cold water on a high rate cut cycle. So there's obviously the Fed chair has reversed his stance to some extent. So if interest rates are not going to cut, then you're going to see a stronger dollar, which again going to aid flows out from emerging markets. And the third aspect is geopolitical tensions outside. The Russia-Ukraine as well as the Israel-Hamas, both are refusing to die or close out in any way. There is positivity around Trump trying to come and play peace broker there and solving it. So, but I would say to the extent that it has an impact on oil, it's important to India, right? And the fourth thing is that the FII selling is, apart from all of these concerns, is also because it's December profit booking time for hedge funds, right? And that will go on till the middle of December, because the last 2 weeks of December, they'll go off on a holiday. So they need to book cash to receive their bonuses. And they will sell in those markets where they made money. And whatever is said and done, India has been the best performing market other than the US for FIIs. And so they will book profits where they made profits. So I expect this, independent of today's news event, to happen. Then you have I wouldn't call it the cream on the cake, but the fact is that Indian earnings season has been disappointing, right? So that's added to the concerns around overvaluation. Has the correction taken care of the entire overvaluation? Not yet. I think some more volatility and some more readjustment of price is still in the annual. That's why I say till mid-December, I would expect this volatility, perhaps a little more correction to happen. But I see a very different story come January onwards, right? Why do I look at it that way? Because one is, Jan 20th, Trump will actually come. By then, all his announcements, everything will be over. So there will be a sense of stability around America, and the money that has to go into America would have gone in. Second is all this profit booking in December needs to be redeployed in January, right? Because they move into cash, they move into US securities, and then they'll want to redeploy in the markets of their choice. So India will be a potential target. Third is this slowdown in earnings, right? If you deconstruct that, I would say three reasons behind that. One is the fact is that the government spending, first because of the election, then post that the government capex has slowed down. So they haven't spent. But I see that in the next 2 quarters, the government spending has to pick up because they will use the budgetary allocations. They have enough fiscal deficit room to be able to spend what they budgeted. So that will lead to a trickle-down effect and lead to more order books and better earnings outlook. Second is the actual September quarter earnings did not reflect the Diwali season because Diwali was later in October. So I would believe that some of these numbers, when they come out in the January earnings season, would actually get upgraded from an outlook perspective. So I see that the current downtrend in terms of downgrading the EPS growth for next year would actually get stabilized, and you would have a fresh outlook and perhaps an uptick in the earnings expectation. Then we have also, 1st February is the union budget. The union budget is a time for government to lay out its policies, infra, the reforms, and there will be a positive expectation around that. So I do think that an FII reversal in flow would start sometime in January and go on for a month or so. And so the markets would probably recover all of these losses in the first quarter. So I say that expect a heightened degree of volatility for the next month or so. But if you're patient through this period, then I think in January and February, you'll enjoy the rewards of your sticking through your investment process.
Point taken. Let's wait for the month of January, and hopefully 2025 is going to be better, because this year has been all about the FII exodus and the big money outflow that we have seen. But taking it back to the Adani story, because that's the biggest talking point in the market. In fact, the more updates are coming in on the Adani case. Ministry of Renewable Energy sources tell ET now that they haven't received any documents from the US Department of Justice at the moment. Prakash joins us with the latest on this one, because Prakash, the biggest talking point in the market is what exactly is going to be the impact on the financials of the company as well as the order which they have won. Any word coming in from the ministry on that?
Yes, we are learning from our sources in the Ministry of New and Renewable Energy that they can't comment on the media reports. In fact, they have not received any documents related to this matter. However, sources are saying that there is a robust system in place for contracts. In fact, the government agencies are following a very transparent mechanism, but they can't comment on this report at this point of time. Along with that, we also approached a SECI on this matter, and the SECI officials are saying that whatever information they have received from media reports, and they can't say anything about the authenticity of the order. In fact, they have not received any document about the charges. SECI officials are also saying that as per the media reports, there is no involvement of SECI officials. It seems that there is some involvement of government officials and the companies, but SECI is completely denying any involvement of its officials as per the media reports. But let's see how it pans out. But at this point of time, there is no official statement from the government on this matter.
Cannot comment on media reports, but SECI, now I don't recall the full form, but it is Solar
Energy Corporation of India.
Okay, they've awarded the order.
Yes, they are the ones who look at bifurcating and give the projects and awards.
And they've said that, look, we've not received anything, so any speculation that the order is going to be cancelled, at least that does not hold true. So that's an ET Now exclusive in terms of what the SECI chairman had to tell ET Now in terms of what the latest update is. But you know, markets are markets, sentiment, technicals, flows, everything comes in the short term. So Naresh, based on today's price action and based on Tuesday's encouraging price action, where do we stand? I mean, one step forward, two steps back, or two steps forward, one step back?
The continuous move in terms of news in the last two sessions actually fractured the recovery. So if you go back to Tuesday, we actually had a good 200, 300 pointer recovery from the lows. We had strong breadth, and by end of it, we saw the Russia-Ukraine news and we saw a crack in the last 1 hour. Now, going into the holiday, the GIFT Nifty was up 200, 250 points, again back to the same 23,700, 800. And we get up today and we see Adani news, and that has again fractured the move. But if you look at today, the only good thing is we've not hit a new low on the mid cap or the small cap indices. We are continuing to see follow-up selling pressure on stocks which we were seeing before also. For example, today, out of the 150 points, you have a 35 pointer impact coming from FMCG. That's an index which has continued to make new lows. You have Reliance Industries, which is down 24% from the top. That tells you there has been a lot of correction in a lot of heavyweights. So here on, the bias is wherein your risk reward is much more on the buy side rather than on the short side. On the way up, 23,700, once we start sustaining, that would indicate a positive reversal. For now, looking out for reversal signals, but overall, majority of the indicators are oversold on the indices across the board.
Oversold indices, that's the view coming in, but the big question is, when do we see that recovery and a sustainable recovery? Because on Tuesday we got excited that perhaps we have made a bottom, that there is going to be a bit of a recovery, but no, that was not the case. But for now, at least it's a recovery from the bottom of the day, though still considerably in the red. But what about the way forward as far as consumption sector is concerned, and what's Morgan Stanley's Rhythm Desai's view on the same? Let's hear out.
Coming out of COVID, rural India took longer to witness the transfer of terms of trade from urban India, but that is now set. And therefore, I think consumption will actually see all-round recovery. The slowdown in urban consumption that a lot of consumer companies are complaining about, I think is temporary. Now, within consumers, though, you have to be a bit more nuanced because there are certain companies that are running into stiff competition. Their moats have been diluted, and there are other companies that have very strong moats. So to my mind, for an investor looking to pick stocks, you have to assess the moat of that particular business. And any business that is subject to intensity of competition will not deliver the growth that you need to make money. So that's the nuance in consumer. Also, the second thing is that because India's per capita income is rising, discretionary consumption will grow much faster than staple consumption. And I think we are only seeing reiteration of those trends, whether it is with respect to quick commerce, whether it's respect to leisure, travel, education, entertainment. I think these areas are certainly going to grow faster than soaps and staple stuff.
The word coming in from Morgan Stanley, but of course the Indian markets, one of the reason perhaps of the FI money flowing out has been the dollar strength. That's what the Trump trade has really played out, and the dollar strength really continues. We're still past the level of 106 on that one, and that means that the rupee weakness is actually worsened. We are at record low when it comes to the rupee. 84.50 is what we have touched. Clearly, Nikunj, traveling outside is going to become more expensive. 84.50. I remember a few years ago we were talking about levels of what, 75, and thinking it's getting more expensive, just heading higher.
You can go to a lot of other countries where the currency is not devaluated.
I think
Sri
only
Lanka,
Turkey, Sri Lanka, and a couple of those. Japan, I think.
Japan. So yeah, it's
These
all
are the
about
favorable
choices.
ones.
It's all about choices.
I'm gonna put in my holidays very soon and make an itinerary for these countries. But in the meantime, let me talk about the dollar strength. Is it gonna get any
Singapore
better?
has not strengthened that much. Singapore dollar is not strengthened.
I'm not sure the relation between that, but Vietnamese currency, I'm told by my PCR friends that too has become a lot more attractive to travel at the moment. But should we buy the currencies and convert them right now? Wait for it.
No, we are at a very critical point when the dollar index chart. So, over the last 2 years, I think sometime in 2021, 22, we were flagging off that at 114, 15 mark for the dollar index. It had got back into a deep overbought territory, and it was time for the index to get back into a correction. Now, at 106 odd levels for the dollar index, we are on the verge of a breakout of sorts. So, 2023 September, October is where we made a high of 107 odd for the dollar index. We fell down to almost 100 odd, for the dollar index, which means we were stuck into this 7-point band for the dollar index for the last 1.5 odd years. Now, if a breakout happens about the 107 mark, I think that could probably be a tricky point for the overall market situation, because this could mean that we could be looking at a potential retest of even 110, 114 plus range for the dollar index in the due course. Yeah, 110 plus is also possible. 107 is the breakout.
Right.
If we cross that, then you're looking at 110 also for the dollar index.
I know, so that means we are looking at levels of 86.5, 87. Until the time the yields will not peak out, dollar will not stop strengthening, we are not going to see inflows into the market.
Correct.
Exactly. So I think the lynch point that we need to track very closely is the dollar strength and the movement in 10-year yields, because that's been the deciding factor so far in the market.
See, my point is that you have to really be cognizant of the fact that what is America's biggest problem? For the first time in its history, their debt is actually higher than the GDP. Right?
Yeah.
If a country has got this kind of a debt to GDP ratio, that means if higher yields is something which is problematic for them. So I don't know who's watching, who's observing, but to assume that the new Republican administration will only print money, they'll only reduce tariffs, only increase tariffs and only reduce corporate tariffs may not be the totality. So let the ball start rolling and then we'll talk about it, where the yields are headed and where the dollar index would strengthen. Because I sincerely feel that the Trump 2.0 versus Trump 2.1 will be very different because of the fiscal deficit you have. When I say fiscal deficit, not the fiscal deficit, but the deficit they have. And which is where I think markets will get it totally wrong.
And you know what's interesting? He's on record to say that he does not like the dollar strength. He wants the dollar to weaken. The only reason why Street is reading into the strength is because of the tariffs and the other trade implications that will happen. That will take the dollar higher. But if you go by Trump's commentary, he does not like a strong dollar. In fact, he believes a weaker dollar is something that is going to be beneficial. So for now, of course, it's been quite extended, and Kunal is not ruling out a possibility of 110 if 107 is broken. We'll discuss all of that more, but there are a lot of moving parts to that. Let's get the conversation back to our home and try and discuss the BTST ideas and make it a bit more simple and not take up a complex subject. The BTST trades for tomorrow, Kunal?
So I'll go with a couple of buy trades, and the ones which have been bullish on. Coromandel Fertilizers, the first stock, looks very attractive. And now, interestingly, the stock is perched at a fresh 52-week high, just very close to those kind of breakout levels. So would look out for targets in the range of 1800 plus, 1810 to precise, and stop loss could be kept at 1735. Keynes Tech is something which has been looking attractive. The stock has shown a lot of resilience today, bounced back from its 50-day moving average, just around that 5,650 as a strong support. So keeping 5650 as a stop loss, would suggest a buy with 5980 as a target for Keynes.
Okay, point taken. That's the view coming in. Nuresh, your BTST trades?
So first would be a buy on Ramco Cements. Momentum continues here. Stop loss at 905, target price of 940. Second is a buy on Power Grid, which has held on strongly in the correction, and today is showing some bit of momentum. Stop loss at 320, target price of 330.
Thanks, Naresh, as well as Kunal, for joining us. Sunil, before we let you go, a quick word, a last word as to give me the top 3 sectors that you like right now, or would at least hazard a buy, so that when that recovery happens in Jan, you are ready for it.
I think BFSI is my top pick because the bank index hasn't grown as much as the Nifty. But the way forward, if you see, because my other 2 sector picks are discretionary consumption, and discretionary consumption, I believe, has to be supported by bank lending. And at the same time, the per capita rise means that the right-hand side of the bank balance sheets, as the investment side, the SIP book, the fee income that comes in is going to support that. And at the same time, I feel that IT as a sector, because with a revival in US corporate, a stronger dollar, all that augurs well for IT companies. So my top 3 sector picks are BFSI, discretionary consumption, and IT.
Okay, so BFSI, discretionary consumption, and IT are Sunil Subramaniam's picks. Mr. Subramaniam, thanks so much for joining us along with Kunal and Nuresh. But on that note,
if you like this video, then like, share and subscribe to ET Now.